I don't overcomplicate a trade. Just do the trade. Buy Bitcoin. And don't do it via MicroStrategy's options, because before you know it, you fuck up the whole thing. And that's been a great lesson to me. And we all know them. There's a whole bunch of guys who love structuring complicated positions. Yeah. Those guys never make money. They never make money. They sound really smart. They never make money. So they're still trying to figure out what it is. Yeah. Like they haven't figured out it's a macro asset. Others have. The sovereign wealth funds obviously are just doing it for diversification of reserves. They're like, it's a technology. It's a diversification of reserves. So if the US is going to do it, we're going to do it. So there's different groups doing different stuff. There is a bunch of people who still don't really want to do the homework on it. They're like, we don't know. It's too volatile for us. But I think usually it's the first mover advantage in this.
Raoul Pal thinks that something significant is about to happen. He claims that the most significant factor influencing all asset prices is macro liquidity, which is the focus of his thesis. He sees a potent combination at the moment. As the macro climate changes, liquidity is rising. The circumstances are favorable for what Pal refers to as a wall of money to enter markets, as seen by falling inflation expectations, growing global central bank balance sheets, and a resurgent appetite for risk. And that, in his opinion, indicates that a significant development in technology and cryptocurrency might be imminent. Remember to click the subscribe button and enable notifications to ensure that you never miss our most recent analysis. Thank you and enjoy the video.
I mean, the last Trump cycle in 2017, where the same thing, the market corrected in the beginning because everyone's fearing tariffs and the same narrative. The Fed were raising rates and doing the balance sheet runoff. And the market screamed higher all year because the Chinese were stimulating, the Europeans had to stimulate. So it feels like, even if the Fed don't do anything, I still think the Fed cut, but let's assume they don't. Well, that's not a prerequisite for the market to do anything. As you said, as long as rates aren't jacking higher, everything's fine. I've just come back from the Middle East. All of the sovereign wealth funds are now buying, right? These are the largest pools of capital in the world. We're hearing it out of Saudi, out of Abu Dhabi, out of Qatar and out of Bahrain. And why that's happening is because the US has become crypto friendly. It's the green light. So the US will get some regulation through. There'll be a bit of a shit show and debating about it and the usual stuff, but they will get some regulation through, which is the clarity that all of the pension funds need. So they're waiting as well. So there is a lot of buying to come from the really big players who've been waiting. Like Goldman has not been able to fully build out its desk, and JP Morgan haven't. They've had crypto for a while, but only for certain types of customers. But they want to build out suites of product, but they've been waiting for regulatory clarity. So yeah, I think it's a big deal, actually. I really do. Things could only be better from here. So for me, it was like a no-brainer of an opportunity, both in tech stocks and in crypto. And so going forwards now, normally speaking, this is the period, my framework is about, them rolling the debt and having to provide liquidity to do so. Mm-hmm. And so what we've got is a lot of forward-looking liquidity coming out of whether it's the weakness of the dollar, whether it's other countries using their balance sheets, a number of different mechanisms. And all of that to me is suggesting that the rest of this year is going to be very strong. And I was kind of thinking the NASDAQ was going to be a V-shaped recovery. And my God, it was a V-shaped recovery. And people are still underweight and short. It's a hell of a setup. There is a set of dominoes that happen in markets. Financial conditions lead everything. For financial conditions, we use the dollar, rates, and oil, right? The three big financial conditions thing. What we found is that leads like the ISM and other stuff by about 9 months. And it leads liquidity by about 6 months, something like that. Liquidity is what drives Bitcoin and NASDAQ, and it leads it by 3 months. So global M2, let's say, leads Bitcoin by about 3 months. I found out, I was like, what's going on with gold? I put it against against financial conditions. It reacts in real time to financial conditions. Holy shit, why didn't I figure this out before?
Of all trading securities, right?
Of all the things, well, because it's a pure currency asset, right? It's the pure thing. And so the moment financial conditions ease, gold moves. And so it's leading everything else. Which was, we were kind of thinking, is it leading or is it doing something weird? Is it trying to price in some catastrophic risk? No, it was just pricing in the fall in the dollar, the fall, rates didn't really fall a great deal, but the fall in oil.
Right,
well, that's what the financial conditions are in the end.
Yeah.
It's the debasement of currency. It's the whole thing is the debasement of currency by excess liquidity being pumped into markets by any mechanism possible. At first, they used the balance sheet. Then we all figured that out and called that money printing. So then they did this Fed net liquidity trick, which was the balance sheet plus the Treasury General account and the reverse repo. Yeah. Then we figured that out. And then they moved to total global liquidity, which is including M2, which is stuff it on the banks' balance sheets. So force the banks to buy bonds.
Raoul thinks markets could rise significantly as geopolitical uncertainties subside and liquidity returns to the system. Despite the predictions of numerous analysts, inflation is still declining. Powell claims that the inflation hawks have been mistaken for the past 18 months and will probably be mistaken once more. He also draws attention to a startling recent development: Scott Bessent's candidacy for Treasury Secretary. Bessent, a seasoned market expert and former chief investment officer at the Soros Quantum Fund, is neither a career scholar nor a bureaucracy. Bessent has a profound understanding of how global macro actually operates, according to Powell, who has known him for over 20 years. Now, let's dive back and hear what he has to say.
The institutions are still either trying to figure out what this thing is.
Yeah.
Right? I had a conversation with one of the biggest kind of financial asset management firms in the world yesterday, based out of the US, and they're like, they've even got a crypto division, but they're other kind of where they allocate the assets. They're like, we don't know how to deal with this. So they're still trying to figure out what it is.
Yeah.
Like they haven't figured out it's a macro asset. Others have. The sovereign wealth funds obviously are just doing it for diversification of reserves. They're like, it's a technology, it's a diversification of reserves. So if the US is going to do it, we're going to do it. So there's different groups doing different stuff. There is a bunch of people who still don't really want to do the homework on it. They're like, we don't know, it's too volatile for us. But I think usually it's the first mover advantage in this. I don't overcomplicate a trade. Just do the trade. Buy Bitcoin. Yeah. And don't do it via MicroStrategy's options, because before you know it, you fuck up the whole thing. And that's been a great lesson to me. And we all know them. There's a whole bunch of guys who love structuring complicated positions.
Yeah.
Those guys never make money. They never make money. They sound really smart. They never make money. There is a risk here that we rerun 98, 99 or 99 because you've just taken all the tail risk. Let's assume that Saudi, the US, and Israel do a deal with Iran. That feels like it's going to happen. Let's say that there will be a ceasefire in Ukraine. And let's assume that the Chinese will come to the table, do something reasonable. Those three things happen. We've taken all of the left tail off the table. And people are going to be like, oh, but inflation's going to come back. And they're going to keep saying that for 18 months, which they kept saying as inflation's fall. So I think it is not a small probability that we have a really blow off kind of next 9 months or so. That's right. But I do think that he's going to have to go back and fix the bond market. For the reasons being, I mean, he's a macro guy. He can see, like us, that the bond market is not functioning the way that it should do. He will have some insights from the Treasury themselves to figure out, okay, what is it that we need to do? And don't forget, when he came in, he said very clearly, I have three things I need to do. Lower the dollar, lower rates, lower oil. Those are the financial conditions of global GMI financial conditions. He's saying, I'm going to lower financial conditions. Nobody listens.
Yep.
He's telling you we're going to have a rip-roaring rally. Gold takes off based on exactly what he's saying. The only one he hasn't managed to achieve is rates yet. Yeah. So he will come back and sort that one out, I think. I don't understand bonds anymore because they're not working according to the business cycle. They're not working according to the oil price. They're not working according to inflation. And it's not like that all of the auctions are failing. So it's not like it's a lack of buyers. So I don't really understand what is going on. It feels to me that liquidity is not in the bond market and they need to do this SLR thing, which is basically allowing the primary dealers to warehouse more bonds. So I think it's a liquidity issue, a plumbing issue, because, I mean, they should be much lower. Look at inflation came out this morning, 2.3%.
Exactly.
Yet 2-year yields are like almost 4%. It's like, this is stupid. It's kind of like, are we having to ignore bonds here? Which is a weird thing for us because we used to always check what bonds were doing to figure out whatever all other assets were doing. And I'm actually just focused using the dollar instead as like our key indicator, because that seems to be a better measure than bonds are right now.
The bond market is at the center of a turning point in global markets, as Raoul explains. He thinks that because the bond market isn't working properly, the U.S. Treasury, under new leadership, will soon have to intervene and correct it. Bond yields are still persistently high, even though inflation has dropped significantly to 2.3%, and the conventional connections between bonds, inflation, oil, and economic cycles have broken down. Raoul is particularly hopeful since Scott Bessent, a seasoned veteran of the Soros Quantum Fund and a true macro thinker, is now in charge of the Treasury. Bessent has experienced the turmoil of actual markets, in contrast to previous Treasury secretaries, who were frequently scholars or policy wonks. Having known him for over 20 years, Raoul believes he has a thorough understanding of market psychology, global macro dynamics, and tail risk management. With his declared objectives of reducing the currency, lowering interest rates, and lowering oil prices, we might witness a situation in which all of the significant tail risks are eliminated if big geopolitical threats, such as tensions in the Middle East, Ukraine, or China, subside. In such case, Raoul thinks we might have a rip-roaring rally in the upcoming 6 to 9 months. He has also turned his attention to the US dollar as a better gauge of what's actually going on with liquidity, even though the bond market is still confused at the moment. In the end, don't forget to like, subscribe, and enable notifications for more valuable content, and as always, happy investing.